the next question being कि there are a lot of I'd say financial products which are similar to mutual fund. जैसे mutual fund हो गए,
हाँ.
index fund हो गए, ETFs हो गए, fund of fund हो गए. So just can you differentiate between all four: ETF, fund of fund, mutual fund, and index fund? How do they differ from each other?
See, these are like, I would say, broadly types of mutual funds. At least the two of them. So index fund is a kind of a mutual fund. So there are broadly two kinds of mutual funds when it comes to management of money. One is passive investing. One is active investing. Passive investing is, let's say there is an index called Sensex or Nifty. So HDFC mutual fund comes with a scheme which says HDFC Sensex plan. Right. It means this particular scheme will invest in the same 30 companies which the Sensex is holding. And whenever there is a change in the Sensex stocks, this scheme will also copy paste the same. It's like a copy paste. कुछ नहीं करना है. This fund manager है, बस वो नाम के लिए है. It doesn't matter who the fund manager is because he's supposed to copy paste, right? So that's called an index fund because you're copying an index, right? The other is an actively managed scheme where is the fund manager says, I will do my research and out of 30 stocks, I'll pick maybe 20, 22, 23, which are better stocks, and I'll try to give you more returns. So that's called active schemes, right? Now the next thing you asked was ETF. ETF is nothing but index fund converted into a stock, and it can trade on the stock market. So exchange traded fund, ETF, right? So index fund converted into a stock, and you can now buy it only from your demat account, like any other stock. But the composition is same. So the returns of index fund and the same counterpart ETF will be same, right? So that's ETF and index fund. Fund of funds, again, as the name suggests, it is fund of funds. So in a mutual fund, what typically happens is the fund manager invest in other stocks, right? That's how the mutual fund scheme is formed. You are the fund manager investing in stocks. In fund of fund, the fund manager is investing in other mutual fund schemes.
Okay.
So basically, you get a portfolio of mutual fund schemes. You get a complete portfolio in a fund of fund scheme. Yeah, but I typically, I mean, in my programs, I tell people to maintain social distance from a fund of funds. Because you end up paying the charges twice. If you notice, the mutual fund scheme you're investing into, they are charging something. It's called expense ratio, right? And the fund of funds you are investing through, that fund of fund is also a mutual fund scheme, which is again charging you expense ratio. So you're paying double the charges. Plus, not many people are aware that taxation of fund of funds is way more disadvantageous compared to pure equity mutual fund schemes. So you pay much more tax in a fund of fund compared to a equity mutual fund. So one, you are paying double the charges. Second, you are paying more taxes. And then you look at the returns, it will give you the answer, all the fund of fund schemes. So it is like, I don't know why it even exists, to be very frank. It should not be there.
In case a retail investor wants to have a portfolio जो fund of fund offer करते हैं, they can just directly reach out to maybe a mutual fund distributor or an advisor of sorts,
right,
जो आपके लिए काम कर दे, जिसको आप सिर्फ एक fixed % दोगे, but then again he'll help you not only be tax efficient but also expenses काफी कम हो जाएंगे, which directly results impacts your overall return when compounded over long periods of time.